Midland Wealth Management presents Market Insights.
Hey everyone, this is Dan Zeigler, Portfolio Manager at Midland Wealth Management. It's hard to believe that we are heading into the last 2 months of the year, but if you're like me, I'm excited to get the president election behind us. I wanted to give a quick update on the markets for the month of October, as there's been a lot of news for investors to digest with the upcoming election. We ended last month, if you recall, on a positive note. Unfortunately, at the end of October, we ended on a negative tone with most indexes down about 1 to 2% on the last day of the month. Overall, the S&P was down 2.66% for the month of October, however, still positive for the year, up about 2.8%. So let's take a deeper dive into the month of October and see what may have caused some of the sell-off in the last week of October. Corporate earnings have actually been very good. So far, 86% of the companies that have reported are beating their earnings estimates, and the average beat is 20.4%, which is outstanding. Historically, companies have only beat by about 3 to 5%, so this is great news for the market. So despite these strong earnings, the S&P 500 is down about 8% since earnings season began. So what's leading to some of this downward volatility? Some of it is caused by companies not forecasting what their earnings expectations are going to be next year, especially with the unknowns of COVID-19. So this is causing some investors to be a little worried. Another cause for the volatility is the increased worries about COVID 19. Europe recently announced new lockdowns as coronavirus cases spiked, and investors are worried we could see additional lockdowns in the US or even across the globe. Markets are also worried about the continued delay of fiscal stimulus, especially at a time when COVID 19 cases are on the rise. Depending on the election outcome, we may not have new stimulus measures until 2021, which could prove to be too late for some companies and individuals. Technology stocks in the month of October were one of the biggest drags on the market, as it seems investors were a little bit more focused on valuations, and some of the undervalued stocks held up a little bit better. On a positive note, the economy did grow at a record pace for GDP in the third quarter, increasing 7.4% over the prior quarter and at an annual rate of 33.1, recovering about two-thirds of the ground it lost earlier in the year. All eyes will now be on the election, and hopefully we will know the outcome shortly. As always, if you have any questions, please reach out to me or another portfolio manager at Midland. Thanks.